Hey guys, it's Sebastian from AskSebby, and today we are going to look at some of the best brokerage bonuses available as we are ending April and moving into May of 2020. One big favor before we dive into all of this is to give this a thumbs up. Doesn't cost you anything, and it really does support the channel. And also, if you really like this content, consider subscribing and turning on notifications. For this video, there's going to be three main sections. The first one is going to be why this matters. The second section is going to be some of the smaller bonuses that are going to be useful if you are someone that doesn't have as much money. And then the third section is going to be the larger institutions, which typically have higher requirements. Final reminder is that for 99.9% of the videos that I do, there's going to be a blog post down below. So if you are someone that gets bored and you just want that information, that's probably your best bet. If you are someone that's here for a conversation though, then the YouTube video makes a bit more sense. So why does any of this matter? Both Graham as well as Kevin have done videos talking about the decreasing interest rates given the Fed's action. So if interest rates decreasing, if you are someone that doesn't want to have money in the market right now, maybe you're someone who feels like we're about to drop off a cliff and that prices are going to be lower in the future, it might make sense to look into these bonuses as a way to keep your money making more money. The big disadvantage of this is that there is a time cost. So if you are someone that can be doing consulting work instead of this, then it might make sense to do that instead. But if you have a lot of time, if you're watching Netflix anyways, signing up for a brokerage account takes you probably 2 or 3 minutes online. Another benefit of bonus hunting, and this applies to a lot of other things, is that it offers you more outsized value. On the small end, you might be looking at a bonus of $100 for depositing $1,000, which is a 10% return on investment. Factor in that this is risk-free because you're not really investing it, you're just putting it into the brokerage in order to get the money. All of these accounts are going to be SIPC insured, so for cash, it's going to be up to $250,000, and then for investments, it's going to be $500,000. Even for some of these larger ones that require you to have more money, let's say $50,000 in order to get $225. Your return on investment there is only going to be 0.45%, which doesn't sound that good, but most of these programs only require you to keep your money in for 45 days, maybe 60 days before you cash it out. Your APY for that is closer to 3.6%. The argument against that is, well, you can only do that once, but there's a lot of these accounts, and a lot of the smartest people I know who don't really want to have money in the market right now are pretty much just going down different accounts and getting these bonuses. Side note, if you are someone looking at this and you're worried about keeping track of all of these accounts, one tool that I recommend to a lot of people that a lot of my friends use is Personal Capital. It's pretty much Mint for a lot of your things. So it keeps track of your brokerages, bank accounts, and your personal wealth. I've heard pretty good things, and unlike Mint, it doesn't disconnect every few days from my accounts. Obviously, it depends on how much capital you have. If you have $500, it probably doesn't matter. If you're someone who has $100,000 or a few $1,000,000, then it might make more sense to look into something like this. If that's something that sounds interesting, I'll leave a referral link down below. Absolute worst case, along with these brokerages, give it a try, and if you don't like it, there's other options out there. Diving into the first section, this is going to be for people who don't have as much capital. So if you're someone who's a student, if you're someone who works a normal job and you don't work in a tech job in the Bay Area, then these are going to be your choices. If you have that very sizable FANG salary, then you might be more interested in the latter section. The first one is going to be Webull, where you're going to get 2 free stocks by depositing $100. I can probably lie to you and hype up the fact that those 2 free stocks can be worth up to $1,400. I always feel that's not really that fair because if you look into the numbers, if you look into the probability, which affects the expected value, it is going to be a bit more reasonable. I did the math in another video that didn't do that well, but if you are someone that wants to check the math, I'd recommend going to that video. The main takeaway is that you're getting about $30 in value from those 2 free stocks. Given the $100 that you're investing into this in order to try this out, that's going to be a 30% return on your investment. Yes, you can get up to that $1,400 stock, it's possible, but it's very, very, very unlikely. The main advantage of Webull and a lot of these newer platforms is that I find they have a better user interface and user experience compared to the older platforms, and even people who are rich, who have a sizable amount of money, tend to look for stuff like that. Next one is going to be Public, where you're going to get $10 for depositing any amount, so even $1. So technically, if you want to be precise, it's like 1,000% return on your investment, but given that you can deposit any amount, I don't really think that's fair. So let's just say it's $10. The main draws of Public is that you can do fractional shares. So if you want to buy something like Amazon, instead of having to buy one whole share, you can buy $10 worth of shares. One of the other advantages of Public is that a lot of the tools are geared towards new people who are new to investing, who want to get their feet wet, but who still want to have a bit of control. So Webull is a bit better if you want to get technical, if you want to get into options trading. For most people right now, you probably have more time than you do money. So trying out these accounts, especially while you're watching Netflix or YouTube, might be a pretty good avenue to generate a little bit more income. If you do want to try those, consider using the referral links down below. Next is Robinhood, where you're going to get a stock that can also be valued very highly, but the expected value is going to be about $7.50. You can deposit any amount, so it does work out pretty well, and it does depend on what you're looking for. For me, I really like their user interface, but a lot of people also feel like it's not advanced enough. Some other people have had issues with reliability with the platform going down, but during that period and also the next few weeks afterwards, we have seen some other ones as well, bigger ones who manage substantially more money also go down, so it's not a specific issue to them. The final section is going to be these larger brokerages, and for most of them, you are going to have larger capital requirements. So instead of $1 or $100, think something like $1,000 to $250,000. The most approachable of the bunch is going to be Schwab, which starts off at $1,000 where you're going to get $100 back. From their chart, it does get a lot more expensive though. We'll take that information and put it into a separate chart just to make it easier to calculate the return on your investment. So by putting in $1,000, you're getting $100, which is 10%. The next level is going to be $25,000 to get $200, which is only 0.8%. And then if we move up to that top section, it's going to be $100,000 for $500, which is 0.5%. Schwab is a pretty good pick, and I think a lot of people really do like it. And I think if you're someone who's doing more investing on your computer rather than your phone, then it's a pretty good choice. For the rest of these, I'm going to go down the list based off how easy it is to get the bonuses, so just be aware of that. Next one is going to be E-Trade, where it starts at $5,000 where you get $100 back. This equates to 2%. The next level is going to be $25,000, then it goes to $100,000, and then it goes all the way to $1 million. At that final top level, you're getting $3,000, which equates to 0.3%. So the first one is obviously the no-brainer one if you have that level of capital. If you are someone with a lot of money, it actually doesn't make sense to go to two of the levels. So 250K and 500K don't really make sense because it's below 0.3, so you might as well either do 200K or 1 million. So before I get roasted for talking about $1 million portfolio, I do realize just from people contacting me that there are people in investment banking and tech in the medical fields who do watch these videos. It's not abnormal to save something like 50% of your income, and if you've been working for a few years, you might have that large capital amount. Next is going to be Chase, where you're going to get $200 for depositing $25,000. So this is 0.8%. There's two other levels above this at $100,000 and $250,000. One of the other benefits of the Chase program is that it can really help you with something like private clients if you want to get that status. And the main draws of that program is that there's no fees for a lot of things such as wires, but you do want to make sure that it makes sense. I've had friends tell me that they were looking to wire money internationally, and even though it was no cost through Chase, their exchange rate was not as good, which made it not make sense. So it would have made more financial sense doing something like TransferWise and paying that fee than to use Chase. If you're doing a domestic transaction, if you're looking to do an angel investment and you are just doing $10,000 or $25,000, then that's probably not going to matter as much. Next is going to be Merrill Lynch, where it starts off at $20,000 and you're getting $150 back, which is 0.75%. There's four levels here. It goes up to $200,000 where you're getting $900. So that's going to be 0.45%. One of the other benefits of doing this Merrill Lynch one is that since Bank of America owns them, it helps you with status over at Bank of America. The main point of status over there is that if you have that asset level, then you're going to get higher multipliers on your credit cards. If you're someone on Team Cashback, then their cards actually make a lot of sense, and I think this is a very reasonable path to take. Side note, if you're someone who works at Bank of America, then I believe you already get the status for free, which is pretty cool. The final one is going to be Ally, and the first level is going to be $50 for depositing $10,000. So this equates to 0.5%. There's a few more levels here, but generally speaking, it's not going to be as competitive. I think a lot of people like the UI of Ally, so If you are looking for that, then that's fine. But with a lot of these, I'd recommend just trying a few and seeing which one works the best for you. It's kind of like a car where you want to do a test drive. So even though on paper, one car might be better than another car, it might not feel right to you. So for example, maybe I like the idea of the Cybertruck, but in reality, if I try driving it, it might feel a bit too chunky for me. On that note, if you are someone that wants to try out any of these brokerages, there are going to be links that are on our website, AskSebby.com, and also down below in the description box. Probably the easiest way to support the channel given the current environment. If you're someone with a small amount, I think those smaller brokerages, those online startups make a bit more sense. If you're someone with a large amount, then it does depend on how much you're looking to put in and then the rates for each of these accounts. If you have the time, it might make sense to do 2 of these accounts, especially if it's just 5 minutes while you're doing something else. My question for you guys is, what has been your experience of any of these brokerages, and what are you doing to make sure that your money is working for you if you are someone that doesn't want to put it in the market? Let me know and the community know in the comments down below. If you liked the video, give it a thumbs up. It really helps us out. If you know anyone else who'd benefit from what we just talked about, share this with them. It'll probably help them out. But otherwise, hope you guys liked it. See you guys next time.